If you are running a tracking business, I want you to listen up because I'm about to tell you how I saved $37,500 a year just making one major change in my business. Hi, my name is Lida. I have been in tracking and logistics industry for 7 years. I started as a tracker, then became a dispatcher and fleet manager, and for the last 3.5 years I have been running my own freight brokering agency business. I have seen firsthand how factoring can eat away at profits, and I want to help you avoid the same mistakes I made. So please subscribe and hit the bell to get notified for more tips on saving money in tracking, and let's get started. I was managing a fleet of 5 tracking companies, and like most of tracking companies, I relied on factoring to keep my cash flow moving. It seemed like a good idea at first, get paid faster, avoid waiting for brokers to process invoices, right? But what I didn't realize was how much money I was throwing away every single month. Let me tell you what happened and how I stopped factoring so you can save money too. When I first started using factoring, we were getting charged 2.5% per invoice. That might not sound like much, but when you start doing the math, it adds up fast. So we were averaging $125,000 per month in revenue. Factoring fee 2.5% meant we paying $3,125 per month just in fees. That's $37,500 per year just to get paid faster. At first I thought, well, that's just the cost of doing business, but then things got worse. We signed up with a factoring company that promised only 1% fee. Sounds like a dream, right? But here is a catch. They only advanced 90% of the load payment upfront, and the remaining 10% would be paid after the broker paid them. However, the factoring company delayed invoicing the brokers on purpose so they could hold on to my money even longer. They were literally keeping my 10% for weeks. That was the moment I realized this system is not built for trackers. It is built to take advantage of us and to take our money. So here is the solution, my step-by-step transition away from factoring company. I decided that I wasn't going to let a factoring company control my cash flow anymore. So I started making small changes that eventually led me to ditch factoring completely. And here exactly how I did it. I started using QuickPay with major brokers like JB Hunt and other big brokerages that offered QuickPay. Instead of paying a factoring company 2.5, I paid a small 1 to 2% fee directly to the broker and got paid within 24 to 48 hours. I split my payments, 30% QuickPay, 70% factoring. Instead of factoring everything, I started using QuickPay for 30% of my lots and factored the rest. This immediately cut my factoring fees by 30%, increased QuickPay to 60%. After a few months, I QuickPaid 60% of the lots and only factored 40%, reducing my fees even more. Then I transitioned to net 30 payments. Once I built enough saving to handle a 30-day wait for payment, I completely eliminated factoring. Now brokers paid me directly and I kept 100% of my revenue instead of losing money to factoring. And here is the result. Before, $37,500 per year wasted on factoring fees, and then after 0% spent on factoring, all money stayed in my business, and I could repair my truck, fuel it, pay my drivers. I took back control of my cash flow instead of letting factoring companies hold my money, and let me tell you this, it was one of the best decisions I have ever made. So, the final advice, should you stop factoring or not? If you are a tracking company just starting out, factoring can help with cash flow, but you should have a plan to transition away from it. Don't just accept high factoring fees forever. The goal should be to keep more of your money in your pocket, not factoring companies. So, here is what you should do. If you're using factoring companies, negotiate better terms, lower fees, faster invoicing. Use QuickPay whenever possible instead of factoring everything. Start saving money so you can eventually switch to direct broker payments. Factoring is one of the biggest expenses for tracking companies, but with the right strategy, it is a cost you can reduce or eliminate. So, what do you think? Drop a comment below. Have you ever been stuck in a bad factoring company, in a bad factoring contract? How do you manage cash flow in your trucking business? Let's talk about it. And thank you so much guys for watching. Please subscribe and hit the bell to get notified for more tips on saving money in trucking and logistics. And I will see you in the next one. Bye.